Okay, ladies and gentlemen, this one is all about how we closed on a deal very recently and we got paid $20,000 upfront. And now we own this cash flowing rental on this property. And I got another one that I'm going to go through. We got paid somewhere around $11,000 upfront. And then I've got another one that we'll go through that's a little bit bigger that we get paid $40,000 on upfront. So if you're curious to know how to acquire real estate that can bring passive income to you every single month, and you want to know how you can do it without spending money out of your savings account to put down the down payment and without having to come up with the rehab money and all that kind of stuff, then this is for you. If you are a serious real estate investor and you're looking to scale, then this is for you. The number one problem that I see with most people is that, number one, they don't know where their next deal is coming from. That happens. I'll talk about that today. But then number two, they have no idea how to fuel this business. They try to do it from their own bank account. And what always happens, I was looking for my wallet. What always happens is that they run out of cash, and then they don't get in this zone where they actually can have consistent deals closing every single month because their business is contracted by the noose that they have around themselves. And that noose is the size of their bank account. I remember going back, I don't know, probably 12 years ago, I was doing a whole bunch of fix and flips. And I don't recommend doing them right now, by the way. It's not the right path forward. That's not the way to do it. But I was doing fix and flips at the time. And I remember asking my bookkeeper, like, where is all of our money? Like, I know that we're making money, but where is it? I look at our checking account and it has nothing. It's like down. What's going on? And she said, well, Nate, you're paying for this rehab over here. You got earnest money on this property and this property and this property. That earnest money account's up to $30,000 now, sitting in other people's escrow accounts. You got a rehab over here that you're funding. And I'm like, holy cow. And what I realized in that moment is that that's where I was stuck. That's where it made it impossible to scale. I couldn't just go acquire another property. I couldn't go get another rental because I was relying on the size of my bank account. And so I had this epiphany, like I needed to change something. And I found this mentor doing something really good in real estate, doing big numbers all the time. And I just asked him, like, how do you do this? Show me. And then I was showing the path, and I'm going to show you that path right here, right now. Okay. I'm going to come over and do a little share screen action for you. And we're going to see, for those of you, we'll get a couple of action shots going on. I want to be able to actually let you guys have visuals of this. Hopefully you'll be able to see this. Hopefully there'll be no obstructions. Yeah, you should be able to see that. Okay. We'll cover that in a little bit here. Well, what I want you guys to really focus in on is the numbers on this and the process on this. What you're looking at right now, this is a property that I just bought. Okay. Well, I bought it like 3 months ago now, something like that. Well, anyways, this particular property, we got for about, actually, I can probably look on tax records. Maybe tax records will have it. Let's actually look at real numbers. I actually have the spreadsheet on this. We're going to go through it together too, but I wanted to look at real numbers. So you can see here. Okay. I got it. It officially closed 6 months ago now. Okay. Wow. Time goes fast. Anyways, it closed 6 months ago, and purchase price on it was $200,000. Okay. $200,000. That's my purchase price directly from the seller on this one. How did I get this? I got this by going and running. So I do two things. We do this organic strategy on social media where we're basically making these posts and we get sellers to come to us. And then we run Facebook ads. That's the two. Keep this business super, super simple. Don't overcomplicate this stuff. Don't go chasing things like cold calling. Like, why on earth would you ever want to cold call a bunch of people? That's like insanity. Okay. And then the other thing is Facebook ads. Facebook ads, what they do is they bring people directly to you, sellers that are looking for someone like you to get an offer from. Instead of you chasing anybody, you just let them come straight to you. Okay. So that's how this one came in. This was a landlord. He had owned the property for some time. Looks like he probably bought it in 2016. So he owned it for what, 8 years, somewhere in that range. Okay, cool. Well, in that time frame, he collected good rent. He did some improvements. He increased the rents, but not up to market standard. He found us, he saw our ad and said, hey, I'm looking for someone to buy my property. Would you guys be interested? And so we started a conversation. We ran the numbers. We came to terms on the price of $200,000, which is how we closed it out here at this number. Now, the interesting part, and this is where the ninja moves start to come in, okay? When we put a property like this under contract, we, of course, we do our due diligence. We send an inspector out to the property. We figure out how much repairs it's going to need. We did that. Additionally, we put all the numbers from the leases onto a spreadsheet just like this, and we do a full financial analysis. Like, I want to know year 1, year 2, year 3, year 4. I want to know if I keep this thing for 30 years, what's the potential? What can happen with this property? Where is it at right now? And where, based on really conservative estimates for the future, where can it go? And so we start to model it out. We look at all the projections for it, and then we make a decision. Is this one we want to tackle? And if it's one that we want to tackle, then we tackle it, okay? What that means is that we have to bring in the $200,000. We also have to bring in any repair money that's needed on the property. Okay. So if we're going to do any kind of like cleanup or renovation, we have to bring that in up front. We also have to bring in a fee for us to do what we have to do to get this property off the ground. Now, that's the big difference right there. So I want you to pay special attention to that part. Where most people in the real estate investing business, what they're going to do is they're going to go out, they're going to find a property, and then they're going to go try to borrow money for it. And then they're going to drain their personal savings account, or they're going to borrow maybe hard money or private money from somebody else. One way or another, though, best case scenario is they'll walk out of closing, usually having sunk 20 to 30% as a down payment. But best case scenario, they'll walk out of closing even, like they borrowed 100% of the money from somebody else. And then they'll start doing their thing to it. The problem with that is that if you're doing an actual business where you're getting really good deals, you're working with sellers and all that kind of stuff, you probably have some time and some of your money sunk into the operations. I know I certainly do. Our team is talking to hundreds and hundreds of sellers at any given time. And so, like, we're working these deals all the time. We paid to bring in those leads. That's a business expense. I got inspectors that I'm paying to go look at these properties. That's a business expense. I have to fund my operations. I've got team members and things like that. That's a business expense. Even if you're only a one-person business right now, you still have business expenses. And so going into a deal where you're walking off the closing table at like break even, that just doesn't cut it. You're not in a position to be able to do that yet. So it's insanity that people try, and they try to build their whole real estate portfolio, their whole real estate business off of that model. It's a flawed model. Okay. Not even the big and the great companies like the Apples of the world, they didn't do it that way. Steve Jobs and Steve Wozniak, they worked in a garage for a little bit. Yes, it was Steve's dad's garage, Steve Jobs' dad, and they built, the prototype and stuff there, and they built the first model there, but they didn't scale Apple to $1 billion company out of the garage. No, they actually had an outside investor come visit them at their garage, loved what he saw, liked their initial numbers, and said, yeah, I'll invest. I'll put in $500,000 and I'll put this in. And that's how they got the brand Apple from like really, really fast to $1 billion company. Okay. And so it doesn't happen out of your own bank account or out of your parents' garage. It doesn't work that way. Now, the good news is that there are millions of people that want to put money into real estate deals. There are not millions of people that want to put money into a tech startup. It's not the same. I mean, I guess there probably are some, there's probably millions, but there's many, many more that want to put their money into real estate deals because they're just proven, they're safe. It's time tested. Okay. Tech startup could flop tomorrow and then people lose all their money. A piece of real estate, it's hard to make it all disappear. It can happen, but it's much, much harder. So therefore, what we do once we have this property, once we've done our due diligence, once we've looked at all the numbers, we've completed our inspection. Now what we're going to do is we're going to present this to potential investors, and we're going to present it to banks at the same time. Okay. We're looking for a bank that can come in and fund somewhere between 60 and 75% of the deal. Once we find that bank with reasonable terms, then we say, okay, cool. Yeah, let's lock in. Let's get this thing done. We then order an appraisal. That's exactly what we did in this one. We ordered an appraisal. The appraiser went out. They said, hey, it checks out. The value's there. We'll give the loan for it. We'll give you, I think 70 or 75% on this one. And then meanwhile, there's still a gap that we have to get funded somewhere, somehow. Okay. And so what we do is we go to investors and we partner with investors at that point. Now, I'm very particular about the investors that we work with. We will not work with just anybody that's trying to throw cash at us. We say no to most people. Number one, I'm looking for someone that's an accredited investor. I want to make sure that this is a good, safe investment for them. And so I follow the accredited investor guidelines for that. Okay. If you're wondering what that is, you can Google search it, but it's really, really simple term. It doesn't mean they took a test or anything like that. And they don't have to pay a fee to become one. What it simply means is that they meet the income threshold set by the government. Okay. Set by the SEC, the Securities and Exchange Commission. So I go out and I take my deals to accredited investors. There's tons of them out there, millions. And I show them deals like this. And then when I get one that says, hey, I really like this deal, then I commence forward. We do some paperwork together. It's called an LLC. We form an operating agreement. It's just the written agreement that the whole deal is based off of. And then we close the deal. Now, in my numbers, I'm very, very clear to make sure that I have my purchase price, any renovation amount, down payment, the fee that I'm going to make on this deal for putting it together. I outline that very, very clear. And I present that when I'm talking to the investor. So then when it comes to the actual wire for the down payment, I get enough to cover all of that stuff. So let's just say for easy numbers, this property for $200,000, if we got a loan for 75% of it, the bank is they're basically requiring $50,000 as the down payment. Okay. I take the 50, plus I take whatever renovation money I need. Let's just pretend it's 20 grand on this one. Okay. I'm just estimating because I don't remember the exact amount on this one, but 20 grand renovations. And then I want to make a $20,000 fee. I need to ask for at least an extra $40,000. I usually ask for a little bit more because I like to cover all the reserves and all the surprises that can happen in real estate. But let's just, for simple numbers, I ask for 40 grand. So I need the 50 plus the 20 plus the 20. That is $90,000. I take my proposal to the investor and I say, hey, Mr. Investor or Mrs. Investor, if you put in $90,000 on this deal, what you'll get in return is you're going to get half of the rents forever. After we pay for taxes, mortgage, insurance, all that kind of stuff, you'll get half of the rents forever. Would that work for you? Here's what that would look like. And I put it to them on the spreadsheet. I share the spreadsheets with them. I show them all the projections and the financials. I give them everything. I let them look under the hood thoroughly. I want them to. I want them to have that ability. And then if they're like, hey, I really dig this deal, I like it, then I say, okay, cool. Then the paperwork is coming. And once you sign the paperwork, you can make a deposit over at the title company and we'll get to work. And that's what we do. Okay. It's not that complicated, not that complicated. Okay. And if you're worried or wondering like, well, hey, what about how do I get the investor? Inside of what we do here at like our signature program is called Social Media Blueprint. Social Media Blueprint is like the holy, I shouldn't use the word holy grail. I don't want to go that far, but it's really good. It is by far the best thing I've ever seen for being able to market directly to sellers and then market to potential investors. Okay. And that's the same thing for you folks that are wholesaling still. If you're trying to find buyers, just turn on Facebook ads. That's what Social Media Blueprint does. Like, there are so many of them out there, and as opposed to you going and chasing them, let them come to you. Let them ask you for whatever you got. Okay. It's so much easier to do this whole business that way. So that's how that deal worked. Okay. That's like the nitty gritty details. Now, if you're curious, like, well, what happened after closing? So on this is the little 4 units still. We still own this. We're collecting $3,100 per month in rent. When one of the next tenant lease that expires, we're going to bump the rent a little bit. We've done some repairs here and there. But all in all, it's performing. It's hit satisfactory levels for our investor. It's done the same thing for us, and it will continue long-term. Okay. Next one, little townhouse here. This little townhouse, we picked this one up, I think for maybe $45,000, and it's rented for $1,200 a month. And if you just like pencil the numbers in on that, that's a screaming deal. Okay. Buy it for 40, rent it for $1,200 a month, even with the association payment in the middle, it still pencils very, very well. It's a strong performing little property. So similar setup with this one. We found the property through our social media blueprint. Okay. Once we had the seller in contact with us, we presented an offer, doing it the right way. And then once we got an yes, then we inspected the property. That's the next step in the process. After the inspection, we put it all together numerically to figure out like, hey, does this thing really make sense? Is this a good deal or is this a bad deal? And we did that and we determined it was a good deal. And so we went forward. Once we said yes, we found a bank that would finance it. And we found an investor that wanted to come in and partner with us. Okay. Same formula, just like the last deal. You just do this over and over and over again. When you get into a rhythm like this with this, what you'll find is that there's a lot of people out there that want to potentially partner with you, number one, but then number two, you'll find that even the banks, they want to keep lending on deals. Now, for anyone out there that might be like, well, I don't want to work with the bank. My credit might be damaged, or I don't want to take out any loans that have any kind of personal guarantee. There are lenders out there that right now, they'll do non-recourse loans. They'll literally, they just base the whole loan off the asset itself. You purchase the property in some kind of entity, like a trust, land trust, or LLC. And then these lenders, amazingly, they'll actually loan based on debt covered service ratio. Means when the monthly payment comes in, is there enough there to pay for the taxes, the mortgage, the insurance, and then leave a cushion? And if there is, and the bank likes the numbers, then they can lend on those deals without you ever having to do anything personally. So I hear you on that. Like, it's a very, very valid concern. Some people get a little bit worried, like, oh my goodness, what about the bank thing? The bank thing is actually one of the easier parts, especially right now. Banks are hungry. If you notice, they lost a lot of business when the interest rates went up. Like when interest rates were low, they were busy, so busy. Now that interest rates have gone up, a lot of lenders have lost business and they're trying to recover. There's been a whole bunch of mortgage brokers that have already filed for bankruptcy. They've disappeared. So the lenders that are out there, they are hungry. They will work to get a deal done right now. Okay. So it's kind of a cool landscape. Yes, interest rates a little bit higher, but I just got quoted a 5.9%, which isn't terrible. It's not perfect, but it's not terrible. So yeah. Okay. So that's the process of it. Now, I want to do one more thing. How many of you out there, let me know in the chat, either live or replay, it doesn't matter. Let me know in the chat if you'd like to know how to actually get the seller to say yes. Not just yes, like paying market rate, cash offer, give them everything they want, but like an actual deal, and consistently, not just one yes, but every single month, maybe even every single week. How many of you would like to know that? Just say yes in the chat. If you want to get yeses like that, say yes in the chat for me. Okay. I'm going to show you this. I'm going to take a little rundown. I'm not supposed to do this today, but I'm feeling like it's the right thing to do based on where we're at. We are heading into this cycle of real estate right now where there's a lot of people that they're starting to miss payments on their mortgage. They're getting behind. And what happens in that kind of climate, because the economy is going down, jobs are being cut, and people are feeling the pinch, and expenses have gone up. And so in that kind of a climate, what you have to be able to do, you should really know all 17 ways to buy properties. Okay. That's first and foremost. If you don't know those yet, get familiar with them. Tune into this channel, keep watching. We do trainings on different ones at different times, but learn them, learn them really, really well. Come to our next 3-day event. You'll get a good dose of them at that event. Okay. It's all online. It's all 100% digital. And then I want you to do your calls a little different. Okay. So I want your calls to go like this. Your first phase of the call, it should be all about an introduction. You should be building a rapport with them. You should be setting the agenda or the frame for the call. What the mistake most people do is that they'll just plow right into price. The seller will say something like, hey, I saw your ad. How much are you going to give me for my house? I want 270. Are you going to give me 270? Are you going to, and they just jump right there. And then you have to be delicate to not answer that question, but instead come back to it. The way that I do it is I simply say, hey, Mr. Seller or Mrs. Seller, I'd love to answer that question, but I've never even been to your property. And there's no way that I'm just going to shoot from the hip and give you a number that I couldn't honor. Like, I want to make sure that I do this right. Is it cool if I ask you a handful of questions? And then after we, make some good assessments, then we determine what that offer price would be together. Would it be cool if we did that together? And then they'll say, yeah, okay, cool. And then you go into discovery. That's this phase. This is the most important phase by far. Okay. You have to understand everything. Do they got a new house that they're moving into? If they didn't sell, what would they do? What's their plan B? Are they about to rent it out? You got to know everything. You got to know everything during discovery. So you go through and you ask all these questions to figure out exactly where they're at. Like, I want to know the details of their mortgage payment. How much of it is going towards principal and interest? I'm going to have them pull out a mortgage statement. I want to know, have they heard from Uncle Joe that they shouldn't rent? Why do they think renting is good or bad? And I want to know those things. That's discovery. Okay. And then we go into the process breakdown. We'll call this the pitch, but we're still not making an offer, not until the very end. And then once we go through process breakdown, then we'll make an offer. And then we'll move this thing more towards closing conversations, like how closing works and things like that. So the biggest mistake that people make, though, by far, is that they jump into the price right away. And that's the wrong thing to do. We've had the blessing and privilege now of closing 13, maybe 1,400 real estate deals here. And I had to learn the hard way on a lot of deals up front. And then when I learned, get out of the price conversation and get to solving the problem for them, get to understanding their goals. Then this thing took off for me, took off for all of us here on the team, because we really understood that it's more about solving their challenge that they have. Okay. You just, in order for you to solve their challenge, you have to really understand what's going on. Okay. Cool. Hey, I hope that this training was valuable for you guys today. I have to fly myself. My family's packing up and we're going to go. My wife's got to go through to get a medical treatment. So we're going to be flying. I'm packing up. So I'm going to shut this one down a little bit early here. But if you need help on this journey, if you're like, gosh, I'd love to have somebody in my corner, reviewing contracts, reviewing how I'm talking, maybe building out my ads for me. Our team is really, really good at that. If you want help with that, just type in the comments down below. What we're on 2023. Let's get some 2023. Type 2023. If you want 2023 to be the best year of your real estate investing business, then type 2023. That will notify my team that we should reach out to you. We might be able to hook you up with a couple free trainings. We might be able to hook you up with the PDF that I just showed you. Whatever you need in your business, my team can basically bounce back and forth with you and they'll help assess. And let's see where it all goes. If we can serve you in any way, we're here. We're happy to help. All right. Thank you much. God bless. We'll see you next round. Bye-bye.